Hello. Hey there, all global Nomad Summit people. I'm sure you guys are coming from different parts of the world, right? My name is Ashish. I'm from Draper Startup House. I hope you can all hear me today. With all the things going around, the world gone remote, and the how like we're all adapting to being in this world right now, right? And still doing the thing that we wanted to do, right? Before this year for the ecosystem, for the digital nomad and the startups out there. So it's been an amazing ride for us also this year, being a hospitality brand for startups. Right, hosting everybody. We were seeing a lot of people coming from different parts of the world, helping them connect with right people in the ecosystem in Bangalore and across 10 locations. uh, we've put up this really amazing, I would say, a chat, not sort of like a webinar, so to speak, right? With these amazing folks, Vinod Shankar, who is the co-founder and partner at Java Capital, and Archana, who is the managing partner at Point One Capital. Welcome, Vinod. Welcome, Archana, for this session. The whole world is watching this session, right? So we'll definitely want to pick those brains into how you guys have been doing amazing works for the startups out there. So, Vinod, just to give it a small intro type, so why don't you tell us a bit about your background, how it all started for you, especially from an angel investment standpoint, right? When did you get into this, and what have you seen, so to speak, right? What has your growth been within the ecosystem? So, just give a short intro for the folks here.
Hey, thanks, Shish. Thanks for inviting. Always a pleasure to talk with you all and to the larger world, as you say now that we're speaking to the world. Thank you for having us. Firstly, and I think interestingly, Java Capital is what currently, as you mentioned, brief journey, right? I started in technology, worked in a startup in 2006 called Emus that got acquired by Sequoia KKR. Then worked there for about 4 5 years doing technology. Basically, I was like a coder or let's say a developer. Did that for the first 5 years, and then I realized I just wanted to do business. In some sense want to learn the ropes of the business. Marketing, business development. So I jumped ship and joined Just Books, which was another startup that was incubated at IIM Bangalore. Joined that, spent another 5 years, doing business development and marketing, and I was the head of marketing, when I moved out of Just Books. And I also started, investing in angel, as an angel investor in 2014 onwards. I did that, till about 2016. Then I joined Kalari. Then I couldn't invest, conflict, so I stopped investing in my personal capacity. Then was in Kalari for about 3.5 4 years. Quit in April this year and started Java Capital, which is an investment network and syndicate, and hopefully, a fund in the making in the next year or so. Yeah, hopefully, and as I said. And I mean, that's the brief, So largely tech, marketing, business development, and investing, angel investor, venture capitalist, and now running Java Capital. That's been the journey for me for the last 15 plus years. I'm excited, with the kind of action that's happening, and I think truly kind of feel blessed to be at a point in this stage where the action is really starting to pick up in India, and obviously the rest of the world is like way ahead in some sense. Yeah, US especially. Yeah.
Awesome. Thank you so much, Vinod. Archana, over to you.
I have a longer journey than Vinod. I graduated in 1997 from IIT Kanpur, and after that, I worked for 12 years in corporates, doing various jobs, where primarily first part of my career in the jobs I was working as a coder. Later, I moved into the finance and was developing the products for home equity. Later in 2012, 2010, I quit the job and started a chain of gyms in Bangalore, which was a very unusual thing for me to do. But being a fitness enthusiast, I always wanted to have a gym for my own uses. So from 2010 till 2015, I ran my business. I organically grow that business. Then in 2015, I realized that my business is very organically growing, while so much is happening in Bangalore. And I can do much better, but I'm picking up a very small thing to do. So at that point of time, I decided that it's time to quit. So I sold all my gyms and started doing angel investments. Later, I joined as a partner for a micro VC fund called Unicorn India Ventures. Worked there for a couple of years and gave them very good return. A couple of my investments is alpha for them. They have given a alpha return. Later in 2019, I set up my own angel fund called Point One Capital, and we have done the first close. Very soon, the media will go out for that. But in addition to having a fund, I'm also a very prolific angel investor with 40 plus companies in my portfolio. And I also, like Vinod, I do a lot of syndication on the platforms like AngelList and Let's Venture. So in 2020, I invested around $3 million by syndication into 16 companies. So that's about me.
That sounds amazing, guys. Sounds really amazing. So, okay, I have this thing, right? I always like to ask this question with any VC or a investor I talk to. What's on top of your mind with respect to the ecosystem that we have in India right now, and the way we are moving ahead in the game, right? You can give your perspectives, right? A short perspective would be nice. So yeah, we can get started with that.
So who should go first? You pick.
Anything we can search. Vinod, go ahead. Yeah.
Okay. Well, now that you told short, right? It's going to be harder, especially if it's a perspective, right? No, but Ashish, honest, right? Like what I've been there, for a long number of years, observing, what's happening, even if I was not actively investing, right? I was involved in some form or other in the ecosystem, right? So when I look back, 15 years when the ecosystem was just budding in 2006, and when I worked for a startup which got acquired, and angel investors made money, right, in 2006 to what's today, right? Like look at the investing ecosystem, right? Like we have number of firms has gone up significantly. We would have had six firms in 2006. Today we're talking of 100 VC firms of various flavors, various fund sizes, various theses, right? That's like phenomenal amount of diversity, right? Then you look at even investors like me and Archana, right, doing micro VCs or angel syndicates, right? That's like something new. Till 2017, right, this was not even a vibrant place to be in. Syndication. It was there, but it was like very, very limited. It was almost like a clubhouse phenomena, right? You had to be in a particular network. So investing is kind of starting to get democratized. There are new people who are coming and investing in the ecosystem, especially from an investment perspective. That's one side of the story. Me. The other
Uh,
side of the ecosystem, Ashish, is the startups, right? That's also part of the ecosystem. And there, right, I think we've gone through a cycle where we've created phenomenal startups like Flipkart, Mintras, or Freshworks, bunch of them, right? The people who work there understand what does it mean to run a startup, what does it mean to take venture capital, what does it mean to take an angel investor's money, right? So that's creating another set of entrepreneurs, much more well informed, much more mature, much more, let's say, reliable, to put money in. So it's like a flywheel in some sense, right? Investors are increasing, founders with the capability to do take venture money and build scalable startups is increasing. So that's the reason I said earlier also, right? I think we are at a point, we just like super poised, in terms of where we can go from here.
Nice.
1.5 decades we've spent. Yeah, I mean, I'll try to be brief, and I think that's like great point to be at. Thanks. Ashish, yeah.
There you go.
so
Archana, your perspective.
So absolutely, I cannot agree more with Vinod. This is the best time to be an angel investor. Um, from both demand and supply side, like supply is the money, and if you say from the VC point of view, sorry, from the startup points of view, and demand is like number of companies, right? So both are increasing tremendously. uh, Moreover, like Vinod has touched upon that point, but what I would like to say, add to that, that the founders and the new generation of companies are taking much bolder problem to solve, and their aspirations has become much bigger. They don't want to solve only the problem for India but even globally. So a lot of SaaS companies are like, uh, s- taking that problem into their stride and trying to solve that. So I have seen myself the journey since 2015 till 2020. The quality of entrepreneur and the quality of companies has improved significantly. And that gives us a lot of opportunity for angel investors to get exits. Uh,
Hmm.
there is a lot of money also playing into the market. That also gives a tremendous opportunity to angel investor to get an exit in later rounds. This is the best time to be an angel investor, and that's why I'm focusing primarily on the angel investment, either by fund or by syndication or even in personal capacity.
Awesome, awesome, great. So, what's the one of many things you look at when somebody approaches you, right? Especially early stage folks, right? I'm not exactly saying considering the folks who've already raised funds before, something like that. What's the few things that you eventually take a look at, right? Initially, when you talk to them, build their relationship, especially to raise their first round if somebody is coming on, right? Because that's the hustle, right? The
Sure.
first round is the hustle where you literally have to talk to everyone. You literally don't know what's the science behind this. There is art, right? Fundraising is an art, and even entrepreneurship is an art in itself. So from your experience of Vinod and Archana, from the investments you have done or something like that, and you have grown yourself from an entrepreneur to an investor, so you understand the journey, the trouble which goes beyond it. So, Vinod, your perspectives on what's the one of many things that you look at when you get somebody on, right?
Yeah, Ashish, I have a particular way of making decisions. Over the years, that's kind of become my way of making decisions. I think each one has its own style. I think
Right.
there's nothing one fits all. When I put this answer out, right? I go market first, frankly. That's what I've kind of ended up doing over the years. Even though I can tell of other parameters, but I am like a market first guy. I believe the market will win. Even if you have a great founder, right? If the market is bad, right? I don't think so. The company is going to win because market's always going to win is my theory, frankly, in that sense. So I look for
Hmm.
winning markets first, and then also look at founders. So also there's this other way of looking at the same thing. Let's assume you have a great founder, but they start in a bad market, right? But if they quickly realize because he's a good founder or she's a good founder, and they immediately realize that this is not what's working, that's when a pivot happens. Even in that case, the market wins. So I am a strong believer in the market first, market wins approach. There are others, who have a founder first approach, and then obviously still the market plays its own role. But that's like eventually the market seems to win. So for me, market is paramount.
Right.
Then I look at founder, quality, the hustle, the energy, the enthusiasm that somebody brings in, right? So I would definitely kind of look at that. The third thing, right, that I look for is something called, you can call that as differentiator or disruption quotient to some extent. Is there something
Mm-hmm.
that the founder is thinking different, be it distribution, be it product, or the idea itself, right? That's like the third piece that I
Mm-hmm.
always keep in mind. The last one, I would look for is, given all the other parameters, is there some market data to validate, which is traction, if you ask, some level, traction.
Right.
Can I see some beta? Can I see some pilots? Can I see X number of consumer engagement? I think these three
Right.
things are the critical points. Within market, I would also do competition and all that stuff. But these are
Mm-hmm.
three parameters that I typically look for, and that's like some kind of a mental framework sitting on with the market on the top for me. That's our at least my thought process. Frankly, that's how I look.
Interesting.
Yeah.
Awesome. Archana, over to you.
Sure. I mean, I agree with all the points which Vinod mentioned. The way I look at the things that invest in a lot of idea stage companies as well. And my best investment, the best return which has given to me is Open Bank. I have invested in them when they were idea. Even my the other which has given me a decent return is Smart Coin. And when I invested in them, they were idea. So invest in a lot of the idea stage companies as well. So definitely at that point of time in such a early stage, definitely I look for the founder, but moreover I look for the preparedness in the founder. I mean, all these market and all those things are there. I mean, obviously, I also factored in while taking that decision. Like I put that into the subjective and objective criterias, right?
Right.
Subjective criteria, which, like, Vinod has mentioned and all that. Sorry, objective criteria, which Vinod has all mentioned. But in addition to that, I also see how prepared founder is for growth. What is
Mm-hmm.
this thought process? It's not like, a lot of founders will come, very good idea and all, but when you will talk to them about the go to market strategy, they don't have clarity, or they will give you a very superficial answer, like, which a 10th grader can also give, like, I'll do digital marketing. Right? What is the meaning of that? Right? So so I go with lot of for me it's very important that how thoughtful founder is, where he has put his thoughts together,
Mm-hmm.
when he is taking that problem to solve. So it is very, very important for me. It's not like, somebody else is doing, since I should
Mm-hmm.
be doing, I should make a deck and start pitching in. No, I and how much
Right.
background work he has done, I
It's
look.
not a rat race.
Yeah. And then for me, somehow I believe in X factor. Sometimes when founder comes, everything is good, but somehow you don't feel that spark. And sometimes when there is very less thing, but still there is a spark. So me,
Right.
I also bane that while taking my decision. So that is that's aspect, I call it subjective. When I
Mm-hmm.
take whether this founder will be able to execute or not, right? It's a very subjective call. You don't know. It's companies in such a early stage, but like, I also factor in while taking the decision. I mean, as I said, objective and
Right.
subjective.
Awesome. Thank you so much, guys. So we have a very interesting question which come. I think this is quite common as well, right? Uh, I want to take the second question first, right? Which says, I got a lot of offers from many places. How do I decide which one is the right one for me as an entrepreneur, as a startup, right? What is your views on that, right? Vinod, you want to go?
No, Archana, please go ahead. Yeah, she's.
So see, it all depends on which stage the founder is in, right? If he's in a very early stage, then he should be looking for not only money, but also for some where he can get some unlocks, like
Mm-hmm.
either business unlock, like, the VC or angel investor can help in unlocking some of the business connections,
Mm-hmm.
and also investor unlock, like if they are connecting them with the right type of investors,
Mm-hmm.
right? So
When you
if
mean right type of investors, is it looking from a strategic point of view? Is it looking from a
or maybe, like, who is some kind, who brings lot some subject matter expertise onto the board. For
right?
example, somebody's is having a health tech startup. So if I bring couple of health tech professional on the onto the board for as an investor or advisor, then I'm doing some value add to the company. So
Mm-hmm.
I should always look for money plus plus.
Mm-hmm.
Right? So early stage, that will be my suggestion to them.
Mm-hmm.
But I know most of the people go after valuation and big brand name. So that is also the reality. Let's
Yeah.
but if that is not the thing, then you should look for these kind of parameters.
Awesome. Thank you, Archana. So, Vinod, I have a question for you, right? I would say VC ecosystem in India right now is so unorganized, right? Uh, what I mean by that is there's so much of opportunities for startup with respect to having angel syndicates, having accelerators, VC firms, angel networks. There's so much across everybody is doing for the startups, right? And how do I, as an entrepreneur, fundraise in a productive manner, right? What at an early stage is a very simple but a very difficult question to answer, which I want to bring it to both of you, right? Uh, what has been your experiences and learnings from your startups or whatever? You have faced this problem yourself, right? Might have faced. So, what is your views if somebody has to really go in a very productive manner? How should they go about it? Is there a framework around it? Is there a strategy around it? Please share with us.
Ashish, look, me or any VC, right, also does the sales job, right? They have to go raise money, right, from our LPs, our investors, right? We kind of, do this in a slightly different manner, let's assume, right? It is the same process. It's like a classic sales process.
Mm-hmm.
So I tell my founders that I worked with previously, right, when
Mm-hmm.
they had to raise the next round also, right? The first thing is, right, to help as an investor on the cap table, or as a for company, right, make a list of all the investors that who you think potentially can fund you, then assign priorities. This is as good as sales, Ashish. Create, use a pipeline. If you have a sales
Mm-hmm.
tool, small CRM like Bijin or something, buy that. It's worth buying for 400 rupees a month if you're running a fundraising process, right? Mark your stages, talk to each of them, follow up. This is a classic sales process. So I tell them, right, you put an Excel sheet or use a CRM, simple CRM, put that,
Mm-hmm.
make the notes of all of these, have it there. Actually that really helps, right? Like for example, the
Yeah.
couple of companies at K-Start that I was handling, I was part of an active process, to help them raise money. And the process worked like simply this way, right? Make a list, go after all of them, as many as possible, who can fit your theory or your company's needs, right? In a way, and
Right.
also VC's needs. So it's
Right.
not complicated, frankly. It's not at all
Mm,
complicated, right? If you look
mm,
at databases are available today, whose VCs are available. You just need to be see. If you don't know who do you want to go after first two, three, right? And that's a priority problem that you have to think about, right? Look, if I'm starting a SaaS
right.
company, right? I know in my head who are the investors that I will go after, frankly. So, and also the
Right.
stage that I am in, I will make for example, let me take a SaaS company, right? If I am raising a series, say, I'll definitely go after like an Axel or Sequoia, definite, right? Because they've done some investments. There are people who have an experience there. I can really, get some help out there. Like what Archana was mentioning previously. Let's assuming I'm doing a deep tech company, like e-planes that we were talking of, right? I know where to go after. I potentially go after, especially, maybe if I'm taking an angel investment, I'll come with, say, Java, GrowX. So every investor has a flavor, a thesis, an area that's defined and they're operating in, right? So
Right.
as entrepreneur, you'll have to do that job, right? I mean, if you're going to, I think, classic other example, right? If you are going to date someone, right, you're going to do some work, right, before you get married, please do that work. Find out, who they are,
Yeah.
what they are, what's their background, what's their portfolio, how much money do they have, are they at the start of the fund, are they end of the fund?
Yeah.
Because people don't invest, if they're at the end of the cycle, they wouldn't have dry
Right.
powder. You have to do that research, right? I mean, it's not easy, but
Uh,
the
this,
process,
this,
at least
this,
telling about the
this,
process is easy. You'll have to put in
yeah.
your effort for sure. Yeah.
This paradox has been so common whenever I talk to anyone. It's time somebody do a dating session for founders to know before, fundraising, right? I mean, just to understand the process of it. Anyway,
Yeah.
uh,
Sales, you can get this done. It's a sales process, frankly.
yeah,
Yeah.
yeah,
If you
yeah,
ask me. Yeah.
yeah. Archana.
No, absolutely. I agree with Vinod, whatever he said. Like, when you go to a sales process, you identify your persona who will be using your product. So for the startup, there are two very specific parameters: the stage and the kind of product they are building. So they
Mm-hmm.
should be targeting, like, who could be their consumers. But I would also like to suggest them to take the help from the ecosystem. Don't
Mm-hmm.
hesitate in asking.
Mm-hmm.
Once you have identified, that job is half done. But after that, you will have to go to them with the right connects so that
Right.
you also get an immediate attention.
Right.
You can always go to contact at some VC, micro VC or somebody's thing, but probably you will not get the immediate attention. So you
Mm-hmm.
should also figure out the ways to approach the VC or angels through some connects,
Mm-hmm.
and that is fine art. You will have to really crack that. And some
Mm-hmm.
of the points could be like, in your friends, if you know that somebody has invested in his company, then you can take your friend's help in
Mm-hmm.
reaching out to that angel investor or VC.
Mm-hmm.
That will be helpful.
Mm-hmm.
Sometimes if you know from their LinkedIn profile that somebody is connected to them, maybe you can ask them for a connect from them. So
Mm-hmm.
there are various things. That one aspect is definitely identification, then reaching out to them in a right way is also a
Mm-hmm.
very important thing, and
Right.
it requires a lot of work. I
Right.
mean, like a typical sales process, even you identify your customer, still you will have to find your how to market, like how to reach out to them. So
Right. Awesome. Great. Awesome. Okay. This is again an interesting question I ask everyone. Is there any one myth around early stage fundraising that you would like to break today and share it with people? Right? One myth which you've found out people have, you know, had there in their minds, gone through it again. Just one myth that you can break today to everyone here. Uh, so who would like to start? Vinod,
I'll start first
go
because
ahead.
recently I was talking in some podcast about it. So somebody from a not the top tier management college, like not from IIM, but the second level management college, they asked me a question that do we see differentiate between the profiles, like do they prefer people from IITs and IIMs uh, as compared to any other place, right?
Right.
And they had a assumption that if you are coming from a some, like second tiered colleges, then you will not get
Mhm.
the VC attention, right? So I want to bust that right now, saying that absolutely not. We don't go by the profile, what is their background is, but what they are doing and how prepared they are for doing that. So I don't think you will see
Mhm.
all of entrepreneurs, like Bank Open, which is one of my success. His founder is high school dropout. So in India, how high school dropout is such a big stigma, right? In US, if a entrepreneur become very successful, then high school dropout is like one of a feather in your hat. But in India, before you become an entrepreneur conducting your life without doing the having a degree, high school degree, high school means college degree, it's a very difficult thing, right? So absolutely not. We go by the idea merit of the proposal which comes on the table instead of their background from where they are coming from.
Thank you, Archana. Thank you, Archana. That is great. Vinod.
No, I think I would definitely appreciate what Archana has said. That's true for all of us here, right? And that's one of the things that I keep talking about. Also, great that Archana brought that up, and burst that. The other myth, I wouldn't say fully a myth, but you can't reach out, if you don't have connections, right? Or you don't have, like we, right, have at least at Java, right? Like we said, look, you send a cold email, you connect on LinkedIn, you connect on Twitter, we will answer you back, with a response, either a yes or no, right? I think most firms, right, I'm just saying, are putting in all the effort, to try and answer back in the least possible time as possible. It's not that we just want to sit on them, but there's also this perception, right? Okay, we don't answer cold mails. That's absolutely not. Our cold mails are answered in 14 days. Frankly speaking, there's a pipeline that we run, like I spoke, and that's something that we want to actually pride ourselves on saying, look, we want to fund companies on cold. The reason I'm telling you that is one of the first companies we are going to fund the next, right, is come through a cold mail actually. And we are like, very very excited, to see that the first company which has come without a warm connect, we are willing to kind of fund, and there's no,
Uh,
this entrepreneur is still in college, frankly speaking, forget which, right? They're
wow.
just in college third year. We are saying, let's kind of go ahead and do it because we believe, it's got the hustle, it's got the character, and it's got the personality, to kind of do it now. So that's the myth, please do that code. I think more VCs, more people should be open to, accepting, cold, and you see, we have enough capital, to do a lot of stuff, right, in a VC firm. I think, additional deployment of people should not be really a worry. I mean, I think we should burst this myth saying, no, cold works, cold we accept. At least, at Java, we are absolutely clear, we are okay with getting cold emails and funding them, if the
when you start that thread on when you start that thread or a blog, I'm gonna be a rocket for that. This is something I really want to be supportive as well
Absolutely
about.
right. That's the reason my
Awesome.
emails, right?
Yeah, yeah.
Ashwin, not just that, right? My email is on my Twitter profile. My email is on my LinkedIn profile, right? I mean, if an email comes, it goes into the pipeline for sure, right? And it comes back. So, I mean, we wish
Of
more
course.
people in the ecosystem do this, and founders don't need to have this connections, coming from XYZ college or XYZ city. You can be from anywhere, and you can still reach out over an email to us. That's some amount of opening up for diversity and democratization, frankly, on what kind of entrepreneurs that we want to fund also. Yeah.
Awesome. I would like to take one question from the audience. How does one navigate targeting the right market when everything is hazy? Like, do you know any resources that can help with market research? What are the metrics that you look for, right? Uh, Vinod, do you want to answer this because you were pointing on this factor earlier as well?
So, see, it's not easy. I can tell you that much, Ashwin. To arrive at correct market size, now it's not an easy problem statement. So there are two ways to do it. One is a top-down approach, where let's say we're talking of particular segment of audience. You just take that and say, look, so much of people, let's say credit card users. So you have 50 million credit card users in India. You see what's your average spend and break that. Let's assume your product is something going for credit card users or something. That's a top-down approach. The bottom-up approach is to figure out, what's the cost of your product, how many people can potentially adopt. The biggest difficulty, right, that I or any investor has is if you are in a market, it's a latent demand. It's not a visible demand. There's no existing product, where you can kind of say, okay, there's a proxy that I can match to. That's the next level of possibility, right? Let's assume selling something like maybe a mattress, right? A new kind of mattress or something. Then I look for some proxy data on beds. Maybe I'm not. This is a bad example for proxy, but that's another way to look at proxy data. If you ask me frankly, and try and map that somewhere. Uh, the other data points that a lot of data points, right, are in some of the IPO documents. For example, for fast food, right, we look at like Burger King S1. You will get some amount of data there. The public documents, right? So we keep an eye out for all these reports, research reports that's kind of come out, and IPO documents that gets filed every now and then. Those are like really strong sources of real data points, if you ask me, right? So we look at that those data points and try and arrive as much as possible in the market. I'll just leave with one last data thing, right? There are cases where it's very difficult to find the market at all. It won't exist, right? It may create a market. Very very difficult decisions to make. It look very small market to begin with, but eventually it will burst out, right? It is very difficult in some sense, right? So you may make a good decision on that, we may make a bad decision, but that's how we have to live with. We try as much as possible proxies, sources to estimate the market size, but that's not an easy problem to address, frankly.
Right. Uh, Again, one more question that I want to bring it up. Due diligence, as such, right, is a little bit of a long process that everyone is like fighting for, and like this sometimes happens within days or within months, right? Okay, little process to process on a realistic standpoint. What does a VC firm do on a due diligence factor for the startup? Can we get realistic talk around it, please?
I'll go first since I invest in a very early stage startups. Um, Very early stage. Maybe Vinod can talk about little late stage because he has worked in
Mm-hmm.
company. See, generally what happens, we do the financial and legal DD. I mean, as the part of diligence. And the other one is sometimes we also do the tech diligence. That like if you are investing in some company which is very deep tech, then we also do tech diligence. But keeping apart the tech diligence part, generally we do financial and legal diligence. As part of financial diligence, we find out, like, if everything is in the place, right kind of, and financial and legal combinedly, what we do see that how the accounts has been managed, if the filings are done correctly or not, all the paperworks are in order or not. So from the company secretary point of view, so the
Mm-hmm.
problem where the diligence takes time when founders don't keep these things in order. So assume,
Mm-hmm.
like, they registered the company maybe 2 years back, but it took 2 years for them to come for the funding, right?
Mm-hmm.
Maybe they were figuring out, which is fine. But sometimes what happens in that time, they haven't filed a lot of things, right? They have
Mm-hmm.
not maintained the proper paperwork. And that's where the diligence takes a lot of time. Like, there
Mm-hmm.
are a lot of processes are involved, they have not followed it because that was not important at that point of time. Or
Right.
time, even if you appoint CAs, they also don't do that work. um,
Mm-hmm.
lot of the steps, maybe they file your IT returns and few things, but there are other things which they don't do. And that's where the
Mm-hmm.
time, most of the time, goes into. If all these things are in
Right.
order, I don't think is for the early stage DD will take very long time.
Awesome. Cool. Vinod, any other further points or
I
similar?
think on early stage, I agree with Archana. It's largely, the company secretary works that kind of gets delayed, frankly, legal. That's
Okay.
see, there is something else like a business intelligence, right? That's something that before an
Mm-hmm.
investment in some sense. Like you spend a lot of
Mm-hmm.
time understanding the business model. So you're gathering up data points from all over the place, figuring out, will this market work? Sometimes that could take time before making a decision, not after making a decision, right? That's a business
Right.
diligence case before you make a
Right.
decision. So that sometimes people
Right.
postpone, maybe some data points are not really in the direction that they are intending. It could be unit economics of this business, right? That's something
Right.
that you really analyze, at a later stage, right? Because you have more data, especially when
Right.
you're doing a series here, right? You have more data, and the data has to
Right.
indicate, we are going to scale this at some point in time, and it's not going to be a burn business, for the next 10, 15 years, right? So
Mm-hmm.
unit economics of the
Mm-hmm.
business, what's the margin? We go deep into that. What's your costs? What's your marketing margin? What's your gross margin?
Mm-hmm.
What's your contribution margin?
Mm-hmm.
All that kind of starts playing out then. At that stage, right?
Right.
It's pure business diligence and economics. Does this business work out in the long run? Now that there are some
Right.
customers, so that could take some amount of time, frankly. And then somebody can take a call. It could be a month
Awesome.
to do the research. Again, depends on the type of teams again you are engaging. Right? Different VC firms have different timelines, on how they kind of operate and
Mm-hmm.
get data going at their end. Yeah. See, typically any fundraise,
Awesome.
Ashwin, minimum, right? It will take at least to close from the point of making a decision at least 2 months, 2 to 3 months. Yeah. Because of diligence, frankly speaking.
Correct.
And the Indian regulations to wire and
Yep.
placement process, all that is like massively what you call complicated. So it does take time. It's not just the investors are delaying it
Yep.
per se. It's just that the regulations around to do a private placement itself
Mm.
is like making it. It takes time, frankly. Yeah.
It's time somebody doesn't think about it. Yeah. Awesome. Okay. I want to put a other question, right? As an angel investor, you also have sort of like your perspective of, okay, this is how I can help any startup. This is how I can look for them. Where do you go for looking at them, or do you go at all? Right? I've seen a lot of angels also spending time within communities, within Twitter threads, all across the board. What is your game of scouting the next big player or somebody new, disruptive into the market? Uh, so your thoughts about it, right? so that the startups who are here can at least know, okay, this is where I can hang out, right? At least build a relationship with. Vinod, Archana, anybody wants to go?
I can go with that.
Vinod?
So, okay, I'll go on that one. So see, VCs also do a lot of relationship development. I assume you are asking that how VCs scout for deals, right?
Correct. Yep.
So, like, as an angel investor, I scout for deal. I mean, there is no one source, right? One is social
Mm-hmm.
media. You have LinkedIn, Twitter presence that is there. Then the other source of my deal source is like a lot of founders. They send me deals, right? Then the third source of deal is like a lot of VCs also sends me early stage deal which they are not interested at that point of time, but they think that that is a good deal.
Mm-hmm.
Um, but the
Mm-hmm.
fourth most important thing which I see that we also go outreach to the
Mm-hmm.
founders when we
Mm-hmm.
find out, we keep asking what are your friends are doing or what is happening, keep an eye on the media. Then
Mm-hmm.
we also we also reach out. Like I have a team member
Right.
who has a specific task to reach out to the founders who are in the LinkedIn who are saying that something new has come up or in the stealth mode or something. So I keep reaching out to them, and
Right.
one of a startup which we are first investment we are making through the point one, that is done through LinkedIn cold connect through by us. That if the founder profile is good, we reach out to them. So for my suggestion to the founders will be that first of all keep your profile updated, and if you are already out in the market, do some media so that more people know about you. And if they find it interesting, they will reach out to you. Like Bank Open, they were part of Yes Bank Incubator, and I saw all the companies name there. Then I reached out to them. So you have to also make sure that your presence is little known into the investor community, and there are modes for that
Mm-hmm.
which you utilize.
Awesome. Thank you, Archana. Vinod, any other perspective or points to put on?
So I think on sourcing, actually, Archana has covered, sources, right? Like there's lots of those sources, right? But there is always,
Mm-hmm.
big. I think, I kind of believe in building relationships, right? That's like given a lot of return in terms of, what's potentially, you can share a deal, and
Mm-hmm.
if you look at the first four deals that we've currently done, right? All of them had a warm relationship already. In some sense, it's either a good VC friend in the market, whom we know for years, or we knew the founder itself. Either me or my partners knew it. In some sense, so relationships is a very interesting key thing to kind of always keep building in this ecosystem. And so, for example, one of the unconventional things that I do for sourcing, right? I kind of put my Calendly open, once in a while. People can book slots, for mentoring, for between 2 to 3 p.m. Usually I put my calendar on my Twitter feed or my LinkedIn feed, and people come there and book. Like one of the companies that I spoke, right, actually came from such chance meetings. So there's a lot of
Mm-hmm.
I believe in serendipity, quite a bit. So I just open myself out to people who want to talk to me. I just keep my doors and
Right.
windows, digital channels always open for anybody to talk to me, and that has been a very interesting source of getting new startups for me also. Right, that's like slightly unconventional. Apart from what we are also doing, founders writing in all the other sources that we kind of have access to, which Archana was mentioning. Yeah, and then you have databases also on top of it, Traction, all these places. Right, there's also places where you
Yeah.
can find companies. Yeah.
Thank you, Vinod, Archana. I just have a very, I think, two questions to end off this session with. Last question from the question here is: have you ever denied a startup because they was doing something right, but you felt that they didn't require any help or aid. You need not mention the startup name. You could just mention the story behind it.
Why would I deny if they're doing well? Why would I deny if they're doing something right? Yeah, I
Yeah.
wouldn't, right? I would actually be opportunistic and jump on them. I wouldn't say no to them. Why would I say that? Wait, see, very
All right.
unlikely. I'll tell you the reason only where I might say no when everything is going right, right? If the founder and the chemistry between them and us, right, even if the deal is looking phenomenally great, but there is some hiccups, in terms of trust levels, right? Or, you think, in the long term, this relationship will not work, right? I may pull off, frankly, given that everything else being right. The reason for and this has happened, frankly, without mentioning, as you said, right, this has happened. I was willing to go with the transaction. Everything was set, but the founders were, I could sense, some trust issues, between the founders and us. And I said, this is the point to call off, rather than, allowing this to, because this is going to be there for the next 5 8 years, right? I don't know, and I don't want to deal with somebody where this is like all the time, back of the mind, I need to keep thinking, what am I saying? Is this trustable conversation or not, right? So I
Yeah.
will pull off that conversation, and
Yes.
if I'm not finding, the conversation is not built on trust, frankly, that's one reason to pull off. Even if the company is going to become the next unicorn, frankly, that can potentially happen. Yeah.
Thank you so much, Vinod. That is great. Okay. On a last pending question, I want to ask you guys, what's the story you want to write with Java and Point One, right? Especially to India, to within the world. What's the story you want to write? So go ahead. I'm basically asking the vision of the firm, right? And what are you trying to do, right? Especially with the motivation of launching this thing on your own now, right? And driving this. What's the story you want to write, right? So yeah,
Sure.
you know.
Okay, I'll go first. Okay. So, honest answer, the vision is not fully mapped out for us, but the thinking at least is, we started from, at a point, as you said, right, it's our own initiative, but what we really want to do is, fund really people with great potential, where they really have, thinking about access, like I mentioned to you earlier. We just want to be there, for great founders, and, stand by them and support them. And that's the larger vision statement, if I have to make. But how are we going to translate that, right, is the process, that we are going to think through. Like the current syndicate model, we're going to do a fund, we're working on other initiatives, multiple stuff. So one by one, right, we probably will, that will pan out over the next, 3 years, 5 years, in the end game, in the sense, is to be, help the ecosystem in a large way. Obviously, capital and money are important, right? If you have to stay in the game and provide the returns to our investors, if you have to stay in the game, that's there. I'm just saying, we just want to fund more diverse founders, provide opportunities for great founders, which maybe, some of them are feeling today in the ecosystem. Look, I'm not being heard, right? Like you asked the same question, right? So we just want to be like able to hear more people and at least, hear them out, and if they are great founders, we should be willing to fund them. Yeah.
So
Yeah.
my
Thank you so
story is
much, Vinod.
Yeah, so for point one, the story is very simple that we want to support as many unique startup as possible. And if we are successful in doing that, like, as I said, unique startups. And finding the unique startups are not that easy. It's a very, very daunting task. And if we identify those, we will return a good money to the investor, help the ecosystem, and
Mm-hmm.
obviously we will
Mm-hmm.
make money for us. The reason is very simple, that identify the right companies.
Mm-hmm. Awesome. Thank you so much, Vinod Archana. That is the exact point of the conversation I wanted to have, right? I hope a lot of people, founders here, got some insights into how angel investors also think and VCs think. So, guys, a lot of founders here would want to reach out to you with a lot of questions or pitching their startup. What should be the right source? If you can put it on the chat, that would be really great. the one source which you can hear their voice about.
Wait, I have put my email ID, or if you want to reach out directly on our other ID also, you could do that. Either IDs. Feel free to write to us. Yeah, yeah.
Awesome. That is amazing. Thank you so much, guys. Ashish here from Draper's Startup House, pushing off today. That was amazing conversation. Vinod and Narchana, I'll keep in touch with you with what we are doing here, and we'll definitely chat around it.
Thank you. Thanks for
Thank you.
having me. Thank you. Good seeing you, Archana. Thank you. Have a good day.
Anytime.
Same.
It's a
Bye.
pleasure.